Sometimes we get callers in here, liberals, who talk about the Reagan recovery, his deficit, and how he raised taxes in order to build up their man Obama. Well, nothing can build up their man Obama. I will vote for anybody against Obama. Obama must be defeated. But I want to give you a little more background about this in a terrific piece by Peter Ferrara. I mention him from time to time in Forbes. And we will link to this on marklevinshow.com, so you don't have to memorize it. But do sit back a little bit, or if you're in your car, raise the volume a little, and take a listen. Reaganomics versus Obamanomics. In other words, capitalism versus socialism. When Reagan entered office, and by the way, you always hear Obama say, when he came in office, it was the worst economy since the Great Depression. First of all, that is a lie. It is a flat-out lie. When Reagan entered office in 1981, he faced actually much worse economic problems than Obama faced in 2009. 3 worsening recessions starting in 1969 were about to culminate in the worst of all in 1981 to 82, with unemployment soaring into double digits at a peak of 10.8%. At the same time, America suffered roaring double-digit inflation, with the CPI registering 11.3% in 1979 and 13.5% in 1980. 25% in 2 years it went up. So you had inflation at 13.8%, unemployment at 10.8%. It was accompanied by double-digit interest rates, the prime rate peaking at 21.5% in 1980. Now that is a problem. The poverty rate started increasing in 1978, eventually climbing by an astounding 33%, from 11.4% to 15.2%. A fall in real median family income that began in 1978 snowballed to a decline of almost 10% in 1982. Furthermore, from 1968 to 82, the Dow Jones Industrial Average lost 70% of its real value, reflecting an overall collapse of stocks. Reagan campaigned on an explicitly articulated 4-point economic program to reverse the slowdown and collapse of the American economy. Number 1, cut tax rate. Have you noticed the liberals say, well, you got a new idea, cut taxes? Why do you have to have a new idea if the old idea works? No, we have a sound idea. Cut the damn taxes. Cut taxes to restore incentives for economic growth, which was implemented first with a reduction in the top income tax rate of 70% to 50%, and then a 25% across-the-board reduction in income tax rates for everyone. The 1986 tax reform then reduced tax rates further, leaving just 2 rates, 28% and 15%. Number 2, spending reductions, including a $31 billion cut in spending in 1981, which at the time was close to 5% of the federal budget, or the equivalent today of about $175 billion in spending cuts for the year. In constant dollars, non-defense discretionary spending declined by 14.4% from 1981 to 82. You've often heard his critics say, oh, he never cut. Not only did he cut, he tried to cut more. So it went from 14.4% cut from 1981 to 82, and by 16.8% from 81 to 83. Also, in constant dollars, this non-defense discretionary spending never returned, never, to its 1981 level for the rest of Reagan's 2 terms. Even during the Reagan defense buildup, which won the Cold War without firing a shot, total federal spending declined from a high of 23.5% of GDP in 83 to 21.3% in 88, and so forth. That's a real reduction in the size of government relative to the economy of 10%. This is what I'm talking about. Number 3, anti-inflation monetary policy, restraining the money supply growth compared today to demand to maintain a a more aggressive printing of money. So he took a tight monetary policy and appointed folks or kept people in place who would pursue that. We have Bernanke, who can't print money fast enough. Number 4, deregulation, which saved consumers an estimated $100 billion per year in lower prices. Reagan's first executive order, in fact, eliminated price controls on oil and natural gas. Production soared, and aided by a strong dollar, the price of oil declined by more than 50%. This is what I mean, ladies and gentlemen, when I talk about unleashing, liberating our economic system. These policies amounted to the most successful economic experiment in world history. The Reagan recovery started in official records in November 1982 and lasted 92 months without a recession until July 1990, when the tax increases of George H.W. Bush in 1990 budget deal killed it. This set a new record for the longest peacetime expansion ever, the previous high in peacetime being 58 months. During the initial 7-year recovery, the economy grew by almost 1/3, the equivalent of adding the entire economy of then West Germany, the third largest in the world at the time, to the U.S. economy. In 1984 alone, real economic growth boomed by 6.8%, the highest in 50 years. Nearly 20 million new jobs were created during the recovery, increasing U.S. civilian employment by nearly 20%. Unemployment fell to 5.3% by 1989. The shocking rise in inflation during the Nixon and Carter years was reversed. Astoundingly, inflation from 1980 was reduced by more than half by 1982 to 6.2%. It was cut in half again in 1983 to 3.2%, never to be heard of again until recently. Real per capita disposable income increased by 18% from 82 to 89, meaning the American standard of living increased by almost 20% in just 7 years. The poverty rate declined every year from 84 to 89, dropping by 1/6 from its peak. The stock market more than tripled in value from 80 to 90, that is 1980 to 1990, a larger increase than in any previous decade in American history. In the end of prosperity, supply-side guru Art Laffer and Wall Street Journal chief financial writer Steve Moore point out that this Reagan recovery grew into a 25-year boom with just slight interruptions by shallow, short recessions in 1990 and 2001. In fact, they wrote, "We call this period 82 to 07, 25-year boom, the greatest period of wealth creation in the history of the planet." In 1980, the net worth, that is assets minus liabilities, of all U.S. households and businesses was $25 trillion in today's dollars. By 2007, net worth was just shy of $57 trillion. Adjusting for inflation, more wealth was created in America in the 25-year Reagan boom than in the previous 200 years in American history. What is so striking, Ferrara writes, about Obamanomics is how it so doggedly pursues the opposite of every one of these Reagan planks. Instead of reducing tax rates, Obama is committed to raising the top rates of virtually every major federal tax. As already enacted into current law, in 2013, the top 2 income tax rates will rise by nearly 20%, counting as well Obama's proposed deduction phase-outs. The capital gains tax rate will soar by nearly 60%. Counting the new Obamacare taxes going into effect that year. The total tax rate on corporate dividends would increase by nearly 3 times. The Medicare payroll tax would increase by 62% for the nation's job creators and investors. The death tax would go back up to 55%. In his 2012 budget, in his recent national speech, Obama proposes even more tax increases. Instead of coming to office with spending cuts, Obama's first act was a nearly $1 trillion phony stimulus bill. In the first 2 years in office, he actually increased federal spending by 28%. And in his 2012 budget, he proposes to increase federal spending by another 57% by 2021. So in 10 years, a 60% increase in a $4 trillion budget. His monetary policy is the opposite of Reagan's. Instead of restraining the money supply to match money demand for a stable dollar, slaying an historic inflation, we have QE1 and QE2, and a steady collapsing dollar, arguably creating a historic reflation. Instead of deregulation, we have across-the-board re-regulation, from healthcare to finance to energy and everything else. When Reagan used to say that his energy policy was to unleash the private sector, Obama's energy policy can be described as precisely to leash the private sector in service to Obama's central planning green energy dictates. As a result, while the Reagan recovery averaged 7.1% economic growth over the first 7 quarters, you heard me right, the Obama recovery, so-called, has produced less than half at 2.8%, with the last quarter at a dismal 1.8%. After 7 quarters of the Reagan recovery, unemployment had fallen 3.3 percentage points from its peak to 7.5%. with only 18% unemployed long-term for 27 weeks or more. After 7 quarters of the Obama recovery, unemployment has fallen only 1.3 percentage points from its peak, with a post-war record 45% long-term unemployed. The Reagan recovery was achieved while taming a historic inflation for a period that continued for more than 25 years. By contrast, the less than half-hearted Obama recovery seems to be recreating inflation. These are the reasons why the great economist John Lott, my good friend, has said, for the last couple of years, Obama keeps claiming that the recession was the worst economy since the Great Depression. That's not correct. This is the worst recovery since the Great Depression. And now you know the rest of the story.